Let's go to our market panel. Liz Peek is with us today, FoxNews.com columnist and Fox News contributor. And we're also joined by Adam Johnson, the Bullseye Brief author. Let's start big picture, guys. We'll have plenty of time to talk about Apple. But, Liz, it's all really one story. We found out over the weekend had confirmation, I think, of what we already knew, that China's manufacturing sector was slowing and, in fact, contracting. But this morning, to Susan's point, we had some rough news on our own manufacturing sector. How does that add to worries that are already out there about a global slowdown for you?
Well, I think what we saw today was sort of the recognition that the trade war might be hurting not only China's growth rate, but also our growth rate. But it's not all about the trade war. It's also about the fact that China has been slowing for months. And we've all seen these data points. But really, there has not been until the Apple announcement, an American company that said, whoa, this is really impacting our business. Keep in mind that the very strong dollar has had an impact there. Other things. But this theme of global slowdown, as opposed to a year ago when we saw global accelerated growth, that is definitely what the market's worried about.
So if you look at manufacturing, Adam, in the United States, that ISM figure, just the overall number, for people who follow it, they know the 50 is kind of the dividing line, right? We're still above that, meaning that we're still expansionary. It's not like we're contracting, not like we're below 50. So is today's market sell-off maybe a little bit of an overreaction, or are you two worried about the fundamentals, even of our own economy?
Yeah, well, as you know, Connell, I've been coming on for months, probably as the Lone Ranger in the bullish camp. And I am still positive that we're going to be able to pull through this. It's a nasty data point, there's no question. But look at it this way, and I say this because, my job is to try to figure out companies that we can invest in. So one of the things I do is to talk to CFOs of companies. And what they tell me, Connell, is given all the uncertainty right now around trade, they're not making decisions that they would otherwise have made. They're postponing. So I think that's in part what you're seeing. People are just pulling back, rather than going out and spending money, investing in their own business. They're going to sit and let this thing play out. I think that's what today reflected.
So moving on deeper into Apple, the tech company seeing its biggest loss in 6 years after revealing weakening sales in China, among other worrisome factors. Liz, some people are raising the thought, is this an Apple problem? We're going to blame China slowdown. We're going to blame tariffs. But maybe the Apple iPhones are losing a little bit of their kick, or the most recent iterations are just not that appealing in China. Is that possible?
Not just in China. Look, high-end iPhone sales have basically stalled. And Apple's response to that is to keep raising prices. I mean, I thought when they decided, whenever that was, a month ago, announced that they were no longer going to be talking about unit sales, I thought that was a horrendous signal that, in fact, unit sales weren't growing. I think what you have is just more money being spent or asked for on the part, as prices go up, for less and less innovation. I mean, I don't know about you guys, but I have no impulse to turn in my phone, which is admittedly fairly new one, because there's nothing that they're offering on the brand new ones that really is worth, coughing up another $500 or whatever. So I think that is, at the end of it, really the problem here. And unfortunately, the whole market and tech sector got scorched by it. But I think it is a little bit specific to Apple.
Adam, is it specific to Apple, do you think? And is there an innovation slowdown?
I do think it's actually specific to Apple. If you look at volumes, they were flat to actually down 1%, whereas average selling prices were up 20%. So they were trying to make up for the fact that volume was down on higher prices. But I think Apple has discovered that there's only so much people are willing to pay. I bought the new phone, 6 months ago. I love it, but guess what? I'm holding on to this thing for at least 2 years, maybe 3, for this very reason. $1,400 for an iPhone? Are you kidding me? And in China, the problem is there are competitors now that will sell phones that are almost as good for about a third the price.
I was trying to figure out what was an Adam screensaver there, but I couldn't now. The other thing, guys, I guess it's sort of the flip side to that argument about this being an Apple-specific story, is that if you look at Kevin Hassett's comments today and others, Apple might not be the only business hit by the slowdown in China. You get GM, certainly other European companies, a Volkswagen, but also big American names like Starbucks that rely on China's huge market to boost global sales may be feeling the pain soon as well. And again, Liz, Kevin Hassett at the White House essentially said this, that we will see other companies warning. So,
and you know, part of the problem is we don't really know what's going on in China's economy. We don't get reliable data. Supposedly,
except from Apple, maybe.
Well, maybe. I mean, that's why everyone took this so much to heart, because this is real news about something that has happened in China. We know that growth has slowed, but has it slowed to 6%, 5.5%, 4%?
Right.
People are out there with all kinds of numbers. Look, there's a lot of bad news. As Susan Lee said, there are some good signs out there. Obviously, the ADP numbers were way above consensus, like 100,000 more jobs created than expected. And by the way, the Celgene acquisition at a 50% premium for $75 billion. That is huge.
That's fair. Yeah, you're right.
Didn't get a lot of optimism.
Didn't get a lot of attention.
Not at all.
Right. Now, in terms of China, though, Adam, one thing that has been brought up, and it's been kind of brushed aside when it is brought up, is that there might be some anti-American sentiment building. I know Tim Cook has said no, he doesn't see any sign of that yet, but obviously there are other options for smartphones in China. Also, other options for coffee. There's a company called Luckin Coffee, I believe, that's been doing much better in China. That would be an option other than Starbucks. So I was there in May in China when Steve Mnuchin was there for the trade talks. We actually went out in the street and asked people about that. I didn't get any sense of it then. My sense was that, the Chinese consumers still liked American products. But I wonder if that starts to change, or maybe is starting to change. What do you think, Adam?
Well, actually, my indicator is a stock that I used to be long. I've since sold it, called Yum China, right? Yum Brands here in the state owns Kentucky Fried Chicken and Taco Bell, Pizza Hut. They are opening more than one Kentucky Fried Chicken in China per day, and it's going gangbusters. And there's been absolutely no bump or hit to their sales. KFC China has also established what is arguably now the fastest and best national delivery service. They do it all on scooters branded with KFC, going around the various cities. So as long as you still see sales strong at Yum China, it gives me reason to hope that the Chinese are not discriminating against U.S. products.